But it's not so great for another market. I'm talking about cryptocurrencies. The crypto winter has been around for a while, but in the last 48 hours, cryptos have crashed after intensified sell-off. This is being called the black swan moment for cryptos. So differentiated from all of the other bad news you've probably hearing if you are a crypto investor or a crypto watcher. Now, if you aren't aware why they were crashing, then let's tell you, it's the collapse of the FTX exchange behind it. FTX is the world's second largest crypto exchange and is on the verge of insolvency. There were reports that Binance, which is the largest crypto exchange, and its rival will acquire it, but they have now backed off from acquiring the company and left investors in the lurch who are wondering about the future of the industry. As of now, investors can't even withdraw their money or liquidate their assets on the currency FTX. So are we looking at the end of the crypto craze as we know it? Take a look.
$100 billion in value wiped out in 24 hours. Major players nosedive. Investors are panicking. Sell-off is the order of the day. The FTX exchange is on the verge of bankruptcy. We are, of course, talking about the crypto crash. The global crypto market cap has gone below the $1 trillion mark in the last 7 days. Bitcoin has shed about 21%, Ethereum has lost 26%, XRP is down 25%, while Binance has lost around 15%. The FTX token is altogether a different story, with losses of a different magnitude. The FTX token is down around 98% in the last 48 hours. But why has FTX suddenly plunged the way it has? Well, liquidity holds the answer. Rumors spread that Binance intends to offload its holdings of the FTX token. The exchange now teeters on the brink of collapse, probably the biggest casualty in the crypto space. Binance is the biggest crypto exchange in the world in terms of the volumes it handles. Year to date, 4.5 trillion US dollars have passed through Binance. Would you still trust in cryptos? Well, the horror doesn't end here, especially when we take the larger picture into consideration. From 2020 to the November of 2021, Bitcoin gave over 840% in returns, Ethereum returned over 3,500%, whereas Cardano yielded over 6,600% in gains. To put it simply, if you had invested just 100 rupees in Cardano in 2020, on 11th November 2021, you could have cashed out with a cool 6,600 rupees. We are considering 11th November as a benchmark because that's when the Bitcoin hit its lifetime highs. So then investing in cryptos seems like a good idea, doesn't it? Think about this then. Cardano is down 91% from its lifetime highs, Bitcoin is down 84%, XRP is down 82%, whereas Ethereum is down 75%. In a sense, cryptos haven't been doing all that great. So your 6,600 rupees would now be only around 600 rupees. So what really triggered this massive fall? Well, rising interest rates are increasing the risk-off sentiment and cryptos are taking cues from falling tech stocks. The broader market downturn has seen investors move away from riskier assets and withdrawal and liquidity crunch are being seen in crypto exchanges, the FTX exchange being a prime example. We won't even get into the question of legality. Especially in India, cryptos continue to operate in somewhat of a grey area of the law. The aggressive tax regime, the very tax regime many of these investors blame, possibly saved them from this massive losses. The big question still remains, will you bet your hard-earned money on cryptos? With Rajat Banerjee, Stacey Pereira for ET Now.
All right, Siddharth Sogane of Tribaco with me on the show. I'm joined now by Kunal Chaudhary of Polo Singapore Investments and Arjun Kazanchi Ruba is also with me on the show. Welcome to all of you. Now, let me begin with you, Siddharth, because we've been speaking on and off over, I would say, the last couple of years, and there's always been one section that is very, very skeptical about cryptos and whether there will be a bubble which will burst. Is that what we've seen now? Is that their I told you so moment?
Good evening, Tamanna. Thanks for having me here. Well, this is totally unexpected. What has happened is more of a fight between two exchanges, I would say, or a strategic attack to kill FTX. I think because see FTX. I mean, market was definitely going through a bear market, but it wasn't so bad. We had good support levels that since the last 4 months, Bitcoin was quite comfortably trading between 18 to 21, $22,000, and the market was going sideways. But events like this have clearly triggered it. Now, what had happened is FTX was incubated by Binance, and in a couple of years, FTX became too strong. In fact, very few people know this, but Sam Bankman-Fried was one of the second largest donors to the Joe Biden campaign as well. Now, all these things have happened, and I think internally there was some lobbying to get cryptos regulated in the
You know,
US.
Siddharth, allow me to come in there because you're talking about some conspiracy theory and corporate rivalry.
Yes.
But that's not what seems to be happening. The
No.
allegations are of misuse of funds
Yes.
deposited by
Yes.
customers. The
Absolutely.
allegations are massive. The allegations are that FTX had a trading arm and that trading arm's balance sheet was
Alameda
pretty
Research.
much
Yes.
made up of their own currency, which they've
Yep.
developed out of thin air. There's
Absolutely. I
something
agree.
fishy here.
Absolutely. So the entire FTX exchange, FTX.com business was situated out of Bahamas without the presence of any regulator, whereas FTX US, which is still operational as an exchange, is regulated by the SEC. So this has happened because of no presence of auditors or regulators in that zone.
It's fine, but the shady business or the allegations of shady business still remain. And I think we
Yes.
can't sidestep that. Kunal Chaudhary, that's the point I'm coming to. Why all of this panic? Because the question mark over the credibility of this financial system has been raised once again. A, it's clearly not decentralized, they're all interlinked. And B, someone can allegedly get away with a lot of murky business.
No, I agree with you. And if you read what SBF Sam Bankman-Fried recently tweeted a few moments ago, he's in effect admitted to the fact that client funds were, I don't know, misnoted, right, or something to that effect. Basically admitting to the fact that yes, they did use client funds as to bring their trading arm, Alameda Research, back into to increase the liquidity there. So in effect, he's admitted in a way to some sort of wrongdoing already, right? So that is already very clear. He's tweeted it out, so it's going to be there for all posterity. I honestly don't know what he's doing. Maybe he thinks by being very open about this, he will get some sort of leniency down the road. I mean, this is the sort of behavior that does lead to all sorts of legal action. And if you believe other rumors, I believe US legal authorities have also instructed Tether to freeze all the USDT assets of FTX as well, right? So things definitely aren't good. And coming to your second question,
That tweet, I'm not seeing that tweet. And I'm saying this because right now, determining who's an original handle and a verified handle is a little difficult. So
I think this is from his official account. Well, I mean, I
okay.
don't know what official means in Musk's world, but it seems relatively official.
Okay.
They're like 10 or 12 points where he's tweeted.
All right.
He's apologized numerous times, but the fact still remains that at the end of the day, FTX is an $8 billion hole, if you believe the numbers that are floating around. And some of that was resulted from misuse of client funds. They've also halted all withdrawals. This is a very, very negative event for crypto as a whole, especially since Siddharth very, astutely mentioned that for the last 4 months, we were sort of moving sidewards. And it's incredibly even more unfortunate that happened today, on the day when the US inflation numbers finally softened a bit, because I firmly believe that if this event hadn't happened, Bitcoin would be probably near 30,000 today or heading towards that number. So the timing is incredibly unfortunate.
Yeah, the timing is bad, but it doesn't take away from the fact that the lack of regulation, which was a selling point for the space, is also turning into a bane along with a boon. Arjun, let me come to you on this. There is no one to really check what these two companies, run by apparently 8 people who were living in the same apartment in the Bahamas, belonging to 2 different companies, what were they doing? Was there a massive regulatory loophole which allowed company A to use the finances of company B? What really did they do? All of this now will have to be probed. And yes, there might be a corporate rivalry angle, but the fact is that there were skeletons in the closet to find.
Certainly. I personally, Warren Buffett's quote really echoes loud right now that the rising tide raises all boats, but it's only when the tide goes out you know who's been swimming naked all along. And it's kind of very clear that FTX and Alameda specifically were facing a liquidity issue and may have been insolvent, considering the fact that FTT on their balance sheets was at about 6 billion, whereas the total market cap on CoinMarketCap was showing it to be about 2 billion. So there was definitely some liquidity crunches that were being faced by FTX. And it's the homogeneous nature of the funds moving between Alameda and FTX, which actually leads to the whole problem arising in the first place, which alluding to the point that was mentioned earlier, that regulated exchanges in the US don't actually have that kind of an issue. Even though Coinbase supports a lot of the market makers through its infrastructure, but Coinbase and those market makers actually have separate books, are audited regularly, they're regulated as trusts and operate as custodians with a high degree of fiduciary responsibility. So that kind of a responsibility is typically enforced through regulation, if not a self-regulatory organization. And we've seen over and over again in the space, we've tried to self-regulate, it doesn't really work because human nature kind of trumps any kind of self-regulatory nature that we have as humans. And at the end of the day, we need some kind of regulation to actually help stipulate this and bring down what are the primary issues, things like wash trading, things like market manipulation, which still take place, insider trading to a large extent. I mean, at the end of the day, CZ tweeted out that he was sitting and having a conversation during dinner when he decided to transfer almost $500 million worth of FTT into Binance, which triggered a whale watch alert on Twitter, which actually started triggering a lot of panic and chaos. I mean, it's very clear why the markets were manipulated in a certain manner. It's very clear that the rivalry is just surface level. But then again, okay, if you go by an art of war, you're not going to attack your enemy when he's at the strongest. You're going to attack your enemy when he's weak. And considering Sam Bankman-Fried was floating all of these other failed exchanges like BlockFi, like Voyager, very honestly, it comes down to kind of starting to delineate the tech from the speculation, and centralized exchanges have repeatedly failed, especially in this cycle. And it really speaks to the tech and the strength of the tech from a DeFi perspective that none of these DeFi exchanges have actually failed. And even if there were cyclical collapses, that was built in at a protocol level to ensure that kind of collapse and or liquidations take place in a systemic manner so that it operates through code as opposed to someone actually trying to manipulate. And it's very, very clear if Alameda is going and clearing a DeFi loan worth 30 million before paying FTX itself, which is a sister concern as well. But apart from its other creditors, which are through centralized exchanges and centralized entities, it's very clear how code is right now is able to actually enforce those on-chain trades in a better manner than these centralized exchanges which are operating through a database and prone to manipulation.
May I simplify this and bring it to a point of relevance for my viewers right now? Many of them perhaps are people who've, and I use this word in single quotes, dabbled, or know people who have dabbled in crypto during the craze that swept India about a year and a half ago. That entire situation was paid to in the last budget. The Ministry of Finance made sure those wings were clipped. Everyone in the business rude about it, that look how they've killed crypto, all the investors are flying off to Dubai. So that Sogani knows exactly what I'm talking about. So I'm going to come to him on this question. Everyone was crying that, you're killing this business, we're providing employment. Well, today's the day Finance Minister Nirmala Sitharaman says, I told you so. We didn't want Indian investors exposed to this, so good we clipped the wings of these exchanges. The system does not work. It doesn't have a safety net as of now. Hasn't that been proven? Isn't this the beginning of the end or close to the end of the crypto craze? Siddharth?
Yes, of course it is. I definitely agree with the regulators, but it's not that this is not a solution. Every time such hacks, such bailouts happen, but that doesn't mean that the regulators don't regulate. It is important to so this entire scam, or I would say this FUD has happened because of lack of regulations. If regulators would have regulated this, auditors would have done it diligently, this wouldn't have happened. So if Nirmala Sitharaman says that she has clipped the wings, it was just to save their skin. Basically, they were unable to regulate this ecosystem. If they regulate it, the exchanges in India could have done probably better than FTX, right? We are looking for jurisdictions where the guidelines are clear, that how the funds are utilized. All the exchanges, I will not even spare anyone, but 99.9% exchanges do misutilize the fund because of the nature of this entire
That
thing.
figure, Siddharth, 99.95% of
99
exchanges.
point 99.99, I would say. I
Okay.
mean, there could be one or two exchanges
Right.
doing the right thing,
Wow.
but even the ones which are regulated by SEC, there are a lot of loopholes, because the nature of this entire ecosystem gives the power to the person who holds the keys of their tokens. So it is important that if you are buying your Bitcoin or your cryptocurrency, you withdraw it and keep it in your self-custodial wallet, which is a hardware wallet. It is also available in a software form.
Okay.
But that is the entire idea. This entire
So the
ecosystem was
marketplace,
built.
the crypto marketplace, the exchange platform has become dubious. Kunal Chaudhary, very quickly,
Absolutely.
can the whole, I would say, system survive with a question mark over the exchanges?
I think it can survive. I think what we're going to see now is we're going to see a lot more regulation. And I think what we're also going to see is consumers, customers themselves actively seeking exchanges which are regulated. So actually exchanges may start labeling themselves as being regulated as a mark of pride. Guess what? We're now, I don't know, TFX, it's a new version. And we're regulated by the SEC in the US and in every jurisdiction we operate. That will give customers a lot more faith in depositing their crypto assets into these exchanges. So I know the whole industry's been, talking about how regulation is a bad thing. And I actually agree to an extent. I think over-regulation is a bad thing. Light touch regulation, which I think is essential to protect investors, as we've seen time and time again over the last 1 year in crypto, is the only thing which is going to help the crypto market get back on track now. I think an event like what we've seen in the last 48 hours is going to set the crypto industry back months, if not years. And it's going to take some time to gain that level of trust back in the eyes of the average retail investor, at least.
All right. It's a story to keep watching. Meanwhile, heart-wrenching tales coming out from around the world, in the US and other countries, of people who've put their life savings in this. And that probably was never a good idea. So just be careful. It's the only thing we can say at this point. Thank you so much to all of you for joining us on this lead story this evening.